Welcome to the Post-Purchase Pro Podcast.
This is the only podcast that dives deep into post-purchase marketing to help Amazon sellers increase sales, ranking, reviews, and profits. It's everything that happens after the initial sale that makes a difference. We call this the back end.
All right, welcome back again to another episode of the Post-Purchase Podcast. Today we have an excellent show in store for you. I'm super excited to bring on a very special guest, the founder of Connectbooks. So welcome to the show, the founder of the Connectbooks, and go ahead and bring him into the studio, May. Thank you so much. Welcome to the show, my friend.
Hi, Steve. It's so great to be here.
Yep. So this is going to be a lot of fun. So we're going to dive into how you became the founder of Connectbooks, but I always like to start before that. Like, how did you get into this world, and how did you make your way into founding, your company?
So it's a long story, but we'll take the short route because otherwise I'll be talking for hours. So I mean, it's an inspiring story. So I start a little short. In the beginning, when I ventured out into my journey into, the business world. So I started off right away, didn't know what I'm going to do with my life, and looking at all different avenues. And I also needed to make make money because I had to pay for my rent, pay for my expenses. And, I wasn't living with my parents at that point. So I started the first job I had initially, I was a cab driver. So I was working as a taxi driver for like 6 months. And the reason why I took it is just because I needed the money. And then, as I was working with it, I was thinking to myself, what can I do with my life? And I decided that accounting would be something I would enjoy. And also the reason why I liked it is that I felt there was also available courses and other stuff to do at that point, meaning I was able to go to college on after hours and, other times when, so I didn't have to do it full time. So long story is I was doing that for like 6 months. Then I got promoted to work and promoted to be more like the dispatcher in the office. So I wasn't on the road anymore. Then after working for a year in a taxi, I got promoted to be the manager. So the manager of the taxi company actually left. I got promoted to be the manager of the company. And at that point, I was working on my bachelor's. So I finished my bachelor's and I started my master's. I came to a point where I felt like continuing with the car service was a very hard job because they open 8 o'clock in the morning and they close 10 o'clock at night, and you have to always be available. It's a 24/7 job. It was really hard. I couldn't really focus too much, and I asked my uncle at that point. He used to run a big business, and I asked him like what I should do. I said, I'm coming to a breaking point. Either I continue on my education or I continue on this job. And I said originally when I started education, I was just a driver, but today I'm the manager and I'm making more money and I have a good job. What should I do? So his question was to me, and I was at that point I was 21 years old. He said, Nacman, when you're going to be 30, what do you want to be, an accountant or a car service job or a car service manager? I said, I'd rather be an accountant. He said, could you afford the education while you continue? And I said, yes. So he said, just jump for it. So what happened was, in the meantime, I was going to take like a different job that was going to pay me like enough to get by, and it was working much less hours, and I would continue my college. And, that's how, and I wanted to leave the car service job. So I gave my boss notice. I told him I'm leaving. At the same point in time, he had a different business, which was a wholesale business. And he said, look, you're a great guy. You've done an amazing job for me for the last 2 years. I don't want to lose you. You're leaving this company. So I have a different opportunity. I'm looking for somebody to do bookkeeping / CFO, be my CFO as well. And he said, if you want an accounting degree, I think you would be perfect. So I figured, this would be a perfect solution because I was looking to switch into the accounting field. Perfect place to jump in. And, I'll also continue the college. So I actually ended up switching over to this other company. And I worked there for 4 years as the CFO of a company. I started off, the bottom down, worked my way up there. By the time I left, we had a team of 5, in the whole accounting. And I was on top of all that in terms from, the day-to-day stuff and in terms of taking care of their financials, in terms of, making sure that everything is done right in the accounting department. So the hardest thing in that business, and this retains to where I brought my experience up till today, is having is understanding your inventory value and cost of goods sold. So the reason why I like to say it is because those 4 years of work actually come to use. Those experience that I gained there still play a role in my everyday cycle today. So in terms of accounting, we can dive into this a little bit more later, but one of the things which a lot of people want to do is have proper accrual-based accounting. Accrual-based accounting means you do your books based on what happens to your business, not based on what goes on at the bank. For example, if you wire a vendor $100,000 today for inventory you're receiving, that has really nothing to do with your P&L. There's nothing to do with how much sold or you made. That's an asset that gets purchased and goes in your balance sheet. So the bigger the business is, the more complex it gets. The bundling and kitting makes it even more fun. If you're buying in different variations and you're bundling, you're kitting. And if you also want to do landed cost, you want to know what the shipping cost, that gets even more fun. So, if it's a small business with 2 items, it's one big deal. But we were operating 25,000 different SKUs. And we're also doing a lot of bundling, a lot of kitting. And to have a proper balance sheet and proper P&L, that's a nightmare. And any accountant or bookkeeper would understand exactly what I just said. So working there for 5 years, doing 4 to 5 years, figuring all that. And at the same time, I also finished my master's degree in accounting. And at that point, I was ready to move something onto my own. So I decided I'm going to open up a bookkeeping company, which is going to be a little different than a typical bookkeeping. We'll do bookkeeping/CFO services, where basically we'll do the proper bookkeeping and we'll also guide the clients at the end of the month based on, what has happened. Sometimes people just do books and they send the client P&L and balance sheet and the guy's like, I don't know how to read this. So we actually explain them, what happened, what's going on with the business. And we also get a lot of more hands-on. Certain clients we'll even pay their bills, we'll even be more of a full, scale bookkeeping. And then I started working with Amazon sellers. Working with Amazon sellers was a challenge on its own. So I started up this business to do bookkeeping, and I started doing bookkeeping for Amazon sellers. I spent 5 or 6 months going through every single report in Seller Central, downloading all the data, and somehow coming up with a set of books. And this customer actually was a private label seller, and they weren't at that point. It wasn't a style you had to sell your business, but it was one partner wanted to buy out the second partner. So partner A wanted to buy a partner B. The problem was that partner B wasn't a 50-50 partner. Since it was a private label business, partner B was in the partner 3 out of the 10 products. So we need to understand how much money each product makes, get a full, clear rundown to really understand, how we're gonna, how to structure some sort of buyout here. So that took me 5 months to do. And that's when I came up with this idea. I was looking to expand my bookkeeping company. I was like, if I can, focus more on the e-commerce industry. And they were telling me look, there's no good solutions out there. People are struggling when it comes to accounting and e-commerce. If you can figure something out, this will work for you. So I jumped on it at that point and started to create a software. So I was taking all the work that I've done, and I originally built the software for myself. We weren't looking to sell it. We were looking, meaning selling it. We just built it for our bookkeeping company. That's how when an e-commerce seller would say, hey, can you do our bookkeeping? We would be able to turn it around much faster, because the first client was 5 months. We want to turn it around within 6 weeks. And the other thing is we also want to automate it and make it easier for the staff, because what I have built, Excel sheets are very good, and you can do crazy stuff with Excel sheets, but that's only as good as you are. Excel sheets is not something I can pass on to a team of people, because they would need 2 years training on Excel, how to do all these pivot tables, sum ifs, VLOOKUPs, and if one little formula in the middle of the sheet went off, then the whole sheet fell off. So sometimes I would spend 2 hours figuring out which formula got, versus with a software, it's not like that. The software just works. You build it, it has code, it's protected. You can't just change things around. So that's when we started building out a platform. And then I started talking to the Amazon sellers, and they were like, look, we have our own bookkeeper. We have them ready for 10 years. We're not really interested in giving you the bookkeeping, but your solution seems like something that we can very much benefit from. So at that point, I was like, we took a complete, pivot, and we made it as a SaaS application where we started, letting other people use it, not just by utilizing our service. So today we run 2 separate companies. We have a bookkeeping service, plus you can use the software, either use different bookkeeping companies. You can even have your own bookkeeper, or you can try to do it yourself. And if you want a full solution from us, we also do the bookkeeping. What's actually interesting is that when I started the bookkeeping company, I didn't have any focus in the e-commerce industry. So I used to work with contractors, I worked with urgent cares, doctors, we did wholesalers, manufacturers, and then we started, with the software. Now, once the software started taking off and the software started getting a lot of clients, people are like, oh, you also do bookkeeping? Let's, just do our bookkeeping. So what we actually did with our bookkeeping company is we made it an e-commerce bookkeeping company only. So we only do bookkeeping for e-commerce clients. And for us, it's been a game changer. I mean, the game changer for us is that, number one, we only need to know one industry. And for the client, it's a game changer because when you call a company to do your bookkeeping, if they don't have good extensive knowledge on e-commerce, they're going to be learning a lot on their own, and they're going to be learning a lot on you, and they can make a lot of mistakes. Versus where you come to us, every person in our bookkeeping company is an expert when it comes to e-commerce bookkeeping. So it's not like you're getting somebody who doesn't know. They have worked already on 10 different Amazon accounts. They know exactly in and out. They understand what inventory means. They understand what it needs to mean. So it was basically a win-win situation, a win on our side that it makes it easier, a win on the client side that they get much more for what they're paying for. And, that's how it's working. So this is how we run today. And we run either the bookkeeping service, or you can just use the software and, just try to do it on your own.
Wow, this is amazing. It's amazing to hear your story as an entrepreneur and the things that you've learned over time. So the first question I have for you kind of digs into what you've learned, which is, you've been in the entrepreneurial game for a little bit now. You've been building a business. What is like the top one or two lessons that you've learned building Connectbooks so far?
As an entrepreneur or for Amazon sellers?
No, as an entrepreneur, and then we'll get into the Amazon side.
Mm-hmm. So as an entrepreneur, I would say the biggest lesson that I recently took away from, not sure if everybody wants to hear this, but I would say is accountability. It follows along the EOS system. I don't have the EOS implemented, so don't challenge me on that. But I know it follows that kind of guidelines. But the biggest takeaway is that when you run a business, you can be very good at what you do. So if you have a certain skill set, for example, my skill set is accounting. I'm an expert at that. But there's that much time I have in the day, and there's that much I can accomplish. So when you're building out a company, you want to get to the point where a company, they say if you're needed day to day, then you have a job. If you can go on vacation for 4 weeks and not do anything, then you have a business. So that's the goal where every business wants to get to. And that's the sweet spot of having a company running on its own. So when you want to have a company running on its own, you want to try to have every single department function, and you want to make sure that each department doesn't need you on a day-to-day basis to be involved. Now, the biggest challenge is how to get that, those machines or whatever, not machines, like meaning to get each department like a machine.
Systems, right? Yeah.
System in there on its own without you being involved. So the thing what I learned the most is accountability. Now, accountability, I don't mean by, it's not about being rude or that. It's just very simple. The person has to have very clear job description, what's expected from them, so they understand what their role and what their position is. It's not just about, okay, just take care of it. No, what is it involved, and where does the job description cut off? If it's something beyond them that they can't do, there needs to be somebody else, or if not, it falls back to the owner. And then once everybody has their clear job description, and then what you do is you say, okay, we're setting a target date. You're starting now. Within 3 months, you need to be by X. So when you have a clear vision of your business, you understand where you want to take your business from year 1 to year 2. And you understand, okay, in year 1, I want to, let's say, double my sales. So if I want to double my sales, what does it involve, right? So whether do I have to do more marketing? Do I have to make more products? Do I have to build out more features? Like, how do you envision that? Once you envision that part, okay, so you have your vision, you have your plan, how you want to grow. Now you have to delegate that to your team. And each one in the team also needs to be capable of handling the delegation, right? You can't expect to, for example, if you want to build a very good product in the software space, you have to have a very good CTO. You can't expect a beginner to take the CTO shoes. So you have to make sure you have the proper people in place. And then when you have the proper people in place, they have to be clear what their job description is. And then after 3 months, you have to come back and say, okay, it has been 3 months. Where are you? And at that point, you have to start making tough decisions. Can you handle the job? Or do you need some help? Maybe we can make it work. and or can we, or do you need somebody else? So holding people accountable, and meaning obviously we want to hold them accountable. We want to make sure that they have a clear job description. We want to also make sure that their thing is achievable, what they have to do, and that's how you can like really like just be very very much focused on your business without like and getting it to a point where you don't have to really be involved in every day.
So how do you do that specifically? Like, how do you hold your team accountable? And then do you have somebody above you, maybe a mentor or a coach or somebody like that, board of directors that's holding you accountable? How is your business structured? And then how do you make sure that you guys are all holding each other accountable? How does that work for you guys?
Yeah, so it's accountable, I would say, is a very fine line.
Yeah.
And because I'm a very nice guy. And you can ask the people around me. No, I really am. But the problem is that you also don't want to be, you want to also have that accountability to you as well. Because if, there's some people who can be like, hey, why hasn't this been done? That's not the type of work environment I want. I want it to be very happy. And it is a very happy, smooth place. Like it's people enjoy working here. But on the same end, we're not here for fun. So the thing, what was the real key for me is having a very clear job description and making sure that the person actually can do the work that I'm handling them. So if the job description is very clear, they understand that X, Y, and Z have to be done. And then another thing is very good to plug in is a KPI, right? A key performance indicator. So you say your job description is X, and this is how we're going to measure your job description. And you have to be on the same page with the employee. They have to really understand that. And once they understand that part, they know after a week, hey, your KPI is not performing. You send them an email, look, this is what your KPI is. It needs to be very open, clear communication. And if not, then the person's not the right fit. Now, sometimes it's too much on one person's plate, or sometimes you can see where one person shines and you move them, you just zero in on that, and all the other stuff you take away and give to somebody else. So, but I think the main thing is having a very clear job description so the employee knows what's expected from them. The employee also knows how that is measured. So, For example, if it's going to be, let's say, for example, if you're an Amazon business, I was actually talking about this with a customer. If it's an Amazon business, he said that he can get more brands meaning other brands would sell their products through his Amazon account. So he goes to a brand, says, I'll buy your products, I'll pay you, and we know how to manage on Amazon. So we were looking to increase profits. And he was telling me that, and we needed something short-term. We have a long-term solution, which was building his private label. But at this point, since the economy changed and stuff changed, he needed a very short-term. And I told him, if this has been working for you the last year, if you bring in another 5 brands, you can, that can boost your bottom line, which, you can help you get by the next year or two until your private label brand picks up. So then goes the question, how do I go about it? I tried so many times. I said, very simple. Is there a person who's in charge of this in the company? And that should not be the owner, because the owner has a million things to do. So you need to have an employee who needs to be in charge of finding new brands. Now, this employee needs to understand what the KPI is. The KPI is, let's make it achievable. So let's say you close 1 brand a month. Let's say you get a 2-month kickstart. By the 3rd month, you have to close. And then from there on, you have enough business to close a brand at least once a month. And then, that's the very clear job description. And then the employee understands that. And you have to also make sure that he or she is capable of actually bringing in brands. They have to have that, they have to be the right fit for that position. But if they're the right fit for that position and they feel they can do it, they claim they can do it, you say, okay, this is what I expect from you. And if in 3 months from that, this is not working, we will have to move on. Because otherwise you don't do it. And I've seen so many businesses where they fail to hold this accountability and they fail to have these meetings. And, it's just basically, I'd say some businesses could just they're running on wheels. They're just flying all over the place. It's one big mess, and the mess just gets bigger and bigger and bigger.
I've seen that before for sure. So, man, I love picking your brain. I can't wait to dive into this a little bit behind the scenes with you. But let's go ahead and move on into talking about how did you go from you were broad bookkeeping, then you honed in and said, I'm going to really help e-commerce people. Now you have this amazing software, and you have a team that helps Amazon sellers specifically with Connectbooks. Let's talk about Connectbooks and how you're helping Amazon sellers, number one, make more profit. is what I have seen from really dialing in the accounting. But what are you seeing in terms of results when you can shine light on the financials? And then what do you actually do to really help Amazon sellers?
So really having a real clear visibility on the business is really what goes back to what I was saying, is holding people accountable, right? So, and this is from a clear business owner's perspective, and me being a business owner, I see the same way. I have a very clear vision of my business. I know where my business is this year. I know where it needs to be next year. And based on where I want to get to, I lay out the different pieces in the puzzle that I want to accomplish. Now, what happens is, so for example, let's say you get a buyer, right? So a buyer is somebody who would go out there, source products for you, take it and list it on Amazon for you, and then sell it. So I once had a customer did the weirdest deal. I don't even know why. He told the buyer, I'll pay you a percent on deals. And the guy immediately racked up $3 million of inventory, but the stuff didn't sell. And it took him over a year to get rid of that inventory, which that's the worst way to structure a deal. The way to structure the deal is you tell the guy, I'll give you a percent of the profit. So let's say, for example, you're going to bring me in laptops. You get a good buy in these laptops. Make sure, first of all, we're not gated. There's no issues, right? Make sure everything is good. And then once it sells, that's when I give you a percent based on the profit. So the idea is that the person is thinking all day about how much money could this make. And then when the person is listing it on Amazon and actually, they're making sure that the selling price is good, they're making sure the profits are there, they're focusing on the profitability of the product. So in that case, if you want to scale your business and you want to bring more, like you want to do like such a type of initiatives in your business, the first thing you need to understand is how much money is the business making. When you add in additional resources, are they adding to your bottom line or are they taking off from your bottom line? And the only way to do this properly is by having the proper bookkeeping, understanding, what was the profit last month? Okay, so I brought in this guy, it's costing me X amount of money this month in payroll, but how much more did we add to the bottom line? Is it actually making more money, making less money? Is it draining our cash, not draining our cash? So in every certain way, when you want to move your business up and up, you really need those books in place to give you, the proper visibility. Now, the question really is, why do you need a software, right? Let's talk very openly. I have a bank account. It's very simple. Why can't I log into my Chase account and see every day, is the balance going up or is the balance going down? So the balance goes up means I'm doing a good job. The balance goes down means I'm not doing a good job. Why do I need books? Why do I need bookkeeping for? So if you are, let's say, a service-based business, let's say like a handyman or a plumber, where basically you just go around to houses, do service calls, and you knock in, let's say, to 10 houses, each call is $150. You collect, let's say, $2,500 a day. The money goes straight into your bank account. I would say that could work, right? You see your bank account every day, it goes up. With an Amazon business, it's inventory. Inventory business cannot work based off the bank account. Inventory business needs to run on accrual-based accounting. And what is the difference between accrual-based accounting and what's the difference between cash basis? So cash basis is what like the handyman would do. The handyman would go around, collect money, bring it in, have his couple expenses, pay for his truck, and that's it. So cash means that every dollar that comes in is considered income. Every dollar that goes out is an expense. So if the bank goes up, the business is doing well. If the bank goes down, the business is not doing well. Versus an inventory-based business, it doesn't really have to do with the bank goes up. Let's take for an example. We're approaching the season. We're approaching, it's already July. Everyone's already busy. Pretty much, I would say the good sellers are like 50% already through their process of being prepared for December, right? So let's say, for example, it's now October and you're getting ready to send a payment to your vendor overseas. You have to wire them $200,000. That $200,000 is for inventory that you're going to be buying in December, that you're buying for December, and you'll make a lot of money when you're selling it in December. Would you want that $200,000 to show up as an expense in your books? No, because that will ruin your P&L. You're not the handyman. You're buying inventory. That needs to be recorded as an asset. So that's really where the software comes into play. Where the software comes into play is that it's going to help you run proper accrual-based accounting, run proper books. And accrual-based accounting is that we are doing the books based on the activity of what's happening in the business. And that means is that the sales will be actually of what product sold, not of what came into the bank. We don't care when you get paid. I mean, we obviously care about that, and there's a receivable report, and you could see when the money comes in and that. But your top line income should be on what the product sold through the month. Your cost of goods sold shouldn't be based on wires out of the account. Not based, if you paid the vendor $200,000, no, that's not cost of goods sold. Cost of goods sold means the cost of each product of what's sold this month. So if I sold a product that costed me $40, my cost of goods sold would be $40. If I sold 10 of the $40 products, then my cost of goods sold would be $400. So we want to see sales, what happened this month. Cost of goods sold means what was the cost of the products that sold this month. That would give us our gross profit margin. And then we can see, okay, so we're bringing in a new buyer, and this buyer is listing a lot of products. Are actually sales going up? So because if you're looking at the sales that happened that month, you can compare this month to last month, and then you can compare your cost of goods sold. And also you want to compare your profit margins. You want to compare all the other stuff back and forth to see how things are moving. And then, then is the easier part, which is you want to know where your overhead is. Overhead means if you don't have a dollar business today, how much does it cost to run your business? So for example, rent is overhead, payroll is overhead, right? You have to pay employees, whether you're doing sales on Amazon. You have to pay your rent, whether you are doing or not doing. So you want to see what your overhead is. Now, where that will help you is if you have your sales and you have your cost of goods sold. This is also another question a lot of people ask me. What is a good profit margin? What is it? Is it 20%? Is it 5%? Is it 10%? And my answer is there's no one number. Why? So let's say you're doing $500,000 in sales a month. And let's say after all the fees and after cost of goods sold, you're left over with $50,000. Okay. So basically you're running at a 10% gross profit after Amazon fees. Now the question is, what is your overhead? So if you're running out of your basement and it's a one-person shop, it's one person running the whole Amazon business, 50,000 I think is a very nice number. If you're running a team of 10 people, 50,000, you're in a loss. So it really depends, what your overhead looks like to understand what your profit margin needs to be, and in order to know what sales you want to do. So the overhead would be very straightforward expenses that go out of the business on a monthly basis. What does your overhead look? If your overhead, let's say, is $50,000, then what you would do is you would look at what is your gross profit margin. So if let's say your sales are $500,000 a month, all your fees you ended by $450, means you have 10% profit margin. That and your overhead is $50,000, by 500 I break even, and by $1 million I make $50,000. If I go to 1.5, I made 100,000. So at least you know what your metrics need to be. You know what your profit margin needs to be.
Yeah.
And if a product is basically bringing in a lot of sales, but you're only profiting 3%, you get rid of that. And you have to have the proper, KPIs, the proper metrics in place, and monitor month over month to see how well you're doing. And all this gets done with having proper books. And in order to have the proper books, you want to have some sort of automation in place, which would save you 40 hours a month on bookkeeping.
Yeah. Okay. So then what's the top one or two things that an Amazon seller needs to start thinking about right away when you start working with an Amazon seller and you start digging into their books? What should they be thinking about right now? What's the first thing that you take a look at?
So first thing is we always want to understand what is their gross profit. I, for example, started working with a seller, and I told him, and it was a big seller, and a lot has changed over the last 2 years, and things are very different. And I always say this thing: if the business makes a ton of money, nobody really cares about the books. Now, what the books I was talking about is not books to the IRS. I mean to say, people, when it comes to tax return, their accountant figures it somehow out. And if inventory is a little bit off, they don't really care too much. And, that's their department. But the problem is when it comes to your business and you're making financial decisions of it, you want to make sure you have the clear numbers. You want to make sure you have everything exactly what it is and you're not fooling yourself. This guy, when I started with him, his gross profit before overhead was 4%. And I was like to him, how are you planning to survive? He had no clue, because what happens is when Amazon gives you disbursements, that's before cost of goods sold.
Right.
Amazon deposits $500,000 to the bank, that's before cost of goods sold. And it was a huge seller. And I was like, what is the plan? Where are you moving forward? And he's like, what should I do? Should I close my business? I said, no. I said, you got to hold some people accountable. You got to have some tough conversations. You got to do something, because this way, in 12 months, you're going to bust.
Yep.
So I would say the first thing to understand is really, what is your gross profit? How much is the profit margin of every single product before your overhead? The next thing is having a clear visibility of overhead, in understanding where, what is the proper profit margin you need to grow your business, and how to go about that.
Yeah, I love it. This has been amazing. So for all the sellers out there that are running their business and they need help on bookkeeping, they really need to get a handle on their financials, which I think is every single seller out there. I've worked with a ton of sellers over the over the past decade almost now, and I always have the conversation that you just described is, I don't know really what I'm making. And if you don't know what you're making, then you're probably not making near as much as you think you are. So guys, where should people go and find out more about Connectbooks and how to get started with you guys and dig into their financials, so that you can help get clarity around what they're actually making and have these tough conversations so they can actually make a good profit?
Yeah, if anybody wants to have more, they should come to our website, connectbooks.com. You can see right away on the site, you have more information available. There's a nice big box on the top that says schedule a demo, and they can just hit the schedule a demo, and they'll get like an automatic email to schedule a link, and take care of all of that. And then once we schedule the demo is where we will get more into the weeds with you, and show you what's going on, and how this can benefit, and making sure this is a proper fit.
Yeah, this is good. And then also, before the show, you mentioned that you have a special offer for our listeners, and they should use some type of special code when they log on to Connectbooks, right?
Yeah, so the special code is post-purchase, and what that is, we'll give 20% off for the first 3 months. However, it is limited to the first 25 signups. So if you do want it, you better jump in it fast.
Yeah, this has been amazing. So as we jump out of here, is there any place else that people should go to find out more about you guys, or should we just send them over to Connectbooks?
The main thing is our website. That's where we hang out all day.
Okay.
We have a live chat there. We're there to answer any questions on the fly that we could. And you can always schedule a demo. And we also have on the website, we have resources, blogs, and a lot of good information that we're having there that sellers can look up.
Yeah, this is great. So guys, go and check out connectbooks.com. And then you can use the code POST-PURCHASE for 20% off the first 3 months. But like he said, it's only limited to the first 25 signups. So go ahead and take advantage. We're not getting anything out of it. We just want you guys to have the best deal possible. So thank you so much for coming on, and we'll see you all on the next episode of the Post-Purchase Podcast.